Hi, and welcome again to another edition of Market Analysis for today, March 14th of 2025. I'm Gio Benacourt, and this is a recording done about 45 minutes prior to the U.S. session open and TGIF. Thank God it's Friday. All right, well, stock futures were bouncing back early in the New York session after retreating enough on Thursday to push the S&P 500 into a correction. Now, President Donald Trump's latest tariff threats were the final straw to send the S&P 500 into its first correction since October of 2023. It's not only a headache for investors, but also Federal Reserve Chair Jerome Powell, who can't put off dealing with what the levies mean for monetary policy much longer. A correction is when the index falls 10% from its most recent peak and is seen as an important marker for traders. It only took 16 days for the S&P to get there, the fastest move since the start of the COVID-19 pandemic in 2020. And there have been 4 other corrections since then. History says stocks tend to keep declining in the first month after a correction, but usually rebound over 3 and 5 month periods. Now, despite the fastest drop in correction for the S&P 500 since the pandemic, traders aren't yet looking to the Federal Reserve for support. The next interest rate decision is on Wednesday, and the odds of rates staying unchanged have veered between 97% and 98% this week. That's as definite as market pricing gets. We can be all but certain that the Fed will not cut rates next Wednesday for the simple reason that policymakers have not signaled a cut, and the Fed does not like to take the markets by surprise. So with that being said, let's take a look at what we can speculate for today's market fluctuation. So we've seen that correction from this high happened already. Actually, it happened here from this high. 10% it was 20%, and we kind of creep a bit more, about 13-14%. Yesterday's market fluctuation stayed within that lower low, that bottom that we might identify it as being here on that, well, on Tuesday, because we had that big drop on Monday. So I am going to continue to speculate that we are going to stay within range, basically sideways trading. It is Friday, so that is the assumption that I'm going to take for the NASDAQ. Then we have the S&P 500. So one thing that I want to bring to your attention, so going to a monthly chart, and we contract the chart, and we look for that correction way back in October 2023, and that will make it somewhere around here. So September of October 23, this one right here. So it'll be right here. Okay, so let's take a look. Boom, boom, boom. Okay, so here we have the top created and then the correction. It took that correction from August of 23 to October of 23. It took it from making that high of 4,621. It took it to make that 10% correction 2 months. This one was basically, like I said, 16 days, half a month. So what does that mean? Does that mean that we could expect a continuation into that? If that's the case, let's just use the lowest low or a bottom, perhaps bottom 5,400, and I want to be able to, I want to update the levels, because we could have another or a continuation of that correction, just like we did on NASDAQ. So let's use that lower Bollinger Band as our first level of support. This marker, this line, goes back to August as well, because that's when this gap up was created and this cluster was made. So we actually have it June of 24 last year. That's just me placing a probable level of support for the asset, since history repeats itself. So let's look for probable levels of resistance. So the initial resistance 56.40, right around that level, and the second one, I'm gonna make it that swing high, this week's swing high. So there we have it, our levels. Again, thinking about sideways trading on this one. Then we have here the Dow that is continuing to violate, or has broken actually, our first level. This line here also goes back to a level of previous support, like we see here. So that's where I'm placing it. Crude oil. So crude oil has been just lingering between 68 and 66. Will today be a different story? Okay, it opened, this candle open here, so it open gap down, right? So perhaps today the market will look for that move lower. So let's just use this double top here that was created in the 20-day moving average. Just again, I'm thinking today is being Friday also, not much volatility in it will be. Nat Gas is looking for a bid, so I'm going to leave the same levels. Perhaps we'll make a nice leg up. Crude oil, gold. All right, so gold, 3,000. I mentioned 3,000 at the beginning of the year on my video on January 20th, and then I also called it this week that we'll be seeing gold at 3,000 by the end of the month, by end of March, but we got there sooner. So levels of support are just gonna be levels that could make sense to you, or previous levels of fluctuations, of, like this case, double top around here. So that's right here in uncharted waters. So now the case for a $3,500 gold marker is set, and I'm going to expand my view and give it, perhaps by June we'll be there, if not sooner. So buying gold, silver, following gold's momentum to the upside. So $35 could be reachable for silver. I'm just gonna make these levels 33.5 my levels of support, and just yesterday's swing low. Buying silver, copper, making another leg up, 49.5, $5. The target for today. Let's see if we get there. 480, first level of support. Second, yesterday's swing low. Buying. Bitcoin is set to make a nice move to the upside. I might leave the same levels. Buying Bitcoin. The euro, looking to rebound. That those last 2 days recover. So 109.5, that's our target. It's initially 109, but we have been there before. The pound is flattish right now. It did open gap down. So I'm going to speculate that we're also going to be within Wednesday's range. Sideways movement. Dollar index, with that news, it opened gap down. So I'm going to speculate that it's going to continue to move lower, but 103 psychological level of support. Have a great weekend, and I will see you Monday.